Hello, good evening, everyone. We are starting a seminar within 10 minutes. Good evening, everyone. Thank you for everyone for joining us today webinar to learn on reverse charge liability for the developer. This is Vishwas, digital marketing expert from RERA Consultants LLP. Let me take a privilege to welcome you all for today's sessions on GST series for real estate. I am honored to welcome our speakers for the day, CA Venugopal sir, CA Rajesh sir, and CA Ashka Madam. To start with, I am pleased to introduce our first speaker for the day, CA Venugopal sir. He is a founder partner in Venu and Vinay Chartered Account since 2002 with academic credentials which include securing All India 45th rank in CA final. He is also certified information system auditor. He has completed various other certification courses from ICAI, namely DISM, course on business valuation, course on internal audit, course on fraud detections, and forensic accounting. He has also completed a one-year course from IIM on data analysis and business intelligence. He has authorized various industry specific and books on GST. Has contributed to the technical guide on GST audit released by ICAI other publication materials. He conducted workshops on filing returns with ease use of automation. He has developed lot of Excel-based free utilities on GSTs like JSON Reader, creating JSON files, GST Invalidator, composition versus regular benefit analysis, GST Impact Reader, real estate project switch on decision analysis, GST audit working paper tool, and many more. He is GST faculty for ICI and conducted various workshops on webinars. His other areas of practice includes, apart from audit, he has hands-on coding in Visual Basics, .NET, Python. He also reviews database design. He conducted various workshops for corporates on use of technology, improve efficiency at work using Excels, building automated reports from accounting and financial applications. He is the man behind the development and managing of cloud applications like TaxMile, Insta Financials, and others. Now, it's the time to introduce our second speaker for the day, CA Rajesh sir, who is one of the top chartered account in practice and partner at Venu and Vinay Chartered Accounts and proprietor of RKTR and Co. He is practicing in the field of indirect taxes at Bengaluru for more than 20 years and advising clients on compliances, tax planning, and representation to government and authorities. He has authored number of books on GST, central excise, service tax, KVAT, as author, joint author, as well as assisting author. To name some of the books, handbooks on annual returns and GST audit, GST Ready Reckoner, GST tariff, practical guide to service tax. Central excise made simple. Central excise law and procedures and KVAT audit manual. He also contribute for background materials on GST and UAE VAT published by ICAI. He has been training the professional students, industries, and departmental authorities in the field of indirect taxes on invitations from ICAI, ICSI, NACIN, a tax department of state and central educational institution, trade bodies, professional bodies, and many more. written many articles on central excise, service tax, VAT, and GST for various professional journals. Now, I am honored to introduce our third speaker for the day, CA Ashika Madam. She is a senior manager, GST department in Venu and Vinay from January 2021. She became an associate member of ICAI in 2013. She joined as a consultant in GSAP and Co. in March 2014 and had comprehensive exposure to the GST ranging from examination of taxability, compliances verification, education, and appeal and representation at all level. She was a member of editorial board of GST monthly bulletin by name Tax Talk, which is read by almost 30,000 plus chartered accountants and others. Today, from these experts, let us learn more about legal provisions, computations, and recent clarifications. Now, I request Venu sir to take over from here. Thank you.
Thank you, Vishwas, for your kind words in introducing, and very happy to be here interacting with the members once again on the monthly series hosted by Naredco, Opaza, and the RERA consultants. I welcome my colleague Ashika for the session. Friends, CA Rajesh Kumar is on another hearing with the department, so he will not be able to participate in today's session. Let's begin this session. In this session, we are going to discuss on the nuances relating to the RCM related liability. Now, what are the challenges here when we say RCM related liability? It is more to do because the real estate do not see any input tax credit. Given that there is no input tax credit, it is going, which is other way becoming cost. The challenge for the industry would be ensuring the cost being optimal. Now, when the costs have to be optimal, it is also very important for them to plan it well. Now, we know under GST, if a taxes are not paid in time, it will also cost the interest for us. Now, when the interest is applicable, that doesn't stop there. Any demand that is raised by the department, either under Section 73 or 74, attracts a penalty starting from a 10% to any liability or any further thereof. So, having the right computation on a timely basis will help, because sometimes these unbudgeted costs will eat away the profits which are there in the margin. So what we are going to discuss today is the legal provisions relating to the reverse charge liabilities for the developer, the computation mechanism on the various aspects that are going to be there, and lastly, on the before we hit the Q&A part of it, a very important thing is certain clarifications that we have received on the applicability of who has to pay and all those aspects. We will be looking at all the points today. So I would invite Ashika to start the presentation, and I'll add my comments as we go on. Ashika, you there?
Yes, sir.
No, for Q3, no, for the project previous salary, you can have at least device, no?
I hope so. Screen is visible.
Yeah, yes, visible.
Its screen is visible.
Yes, yes.
Yeah.
Yes, sir.
So,
yes, ma'am.
yeah. So as we discussed, today's our topic will be reverse charge mechanism. Now, before
Ashika, can you
moving
click on that
into
hide button on the screen? It's yeah. Thank you.
So, in this, we will be first covering our basic provision, which we should know for RCM what it should be. And then we will be going into each and every services, more particularly which is applicable in the real estate industries. So, starting with the part of our basic provision, let us first know about the levy. What is RCM? That is need to be clear. Even though it has been more than 6 years under GST, Though the same has been followed from service tax regime, even in service tax reverse charge mechanism concept was there, but still we get this basic question is what is called as reverse charge mechanism. What is it? Why it is different? Now the thing is normally what is the thing we follow? Normally, whenever we supply any goods or services, while raising our invoice on the same, we charge GST on the invoice, collect it from our customer, and pay it to the government. This is what we call as forward charge mechanism, and this is what normally followed in each and every supply we made. But the government has imposed on certain supply of goods or services where not the person who is supplying the goods and services is required to charge and collect from the counterparty. It is the person who is receiving those goods and services is liable to pay tax under it, which is called as reverse charge mechanism. So over here, supplier only make the payment, only charge GST, only charge what's the cost of the goods or services he has provided. It doesn't collect GST from the receiver, the person who is receiving, is required to pay GST directly to the government, which we are now disclosing in table 31D for inward supply liable under RCM in GSTR 3B. In GSTR 1, there is no reporting for the same. And if we are eligible for ITC, like in case of commercial construction, then we report in table 4A3, where we report it as ITC availed on inward supply under RCM. With this basic detail, what is reverse charge, we'll move into the what are the things to be kept in mind. First thing, if we know, is there is a basic threshold limit to get registered. If you provide goods, it is 20. If you provide service, it is 40 lakhs. But this mandatory registration of threshold limit is not applicable under reverse charge mechanism. So, in case of RCM, if any goods or services which has been notified fall under reverse charge mechanism, even though the recipient turnover is below 20 or below 40, they are mandatory required to take registration and pay tax to the government. So, there is no threshold limit exemption in case of RCM. Another important point to be noted is in RCM, every time tax need to be discharged in cash. There is no option to discharge this payment through credit. So you have to pay in cash only. Then when it comes to exemption, normally when we know that when there is a supply of goods and services, there are certain exemption has been provided by notification 12 for services and by notification 2 for goods. Now, those exemption, as it's applicable in case of forward charge, when the supplier is providing it, is similarly also applicable when the recipient is receiving it. Just for example, if we take, if government has provided any service in relation to a registration, that is exempted. So providing of service of government, though even covered under RCM, but if it is in the nature of registration, recipient will not be liable to pay tax on it as it is specifically covered under exemption notification, even though recipient is liable to pay under RCM. Coming to ITC part, though most of the cases ITC is allowed, but as we are dealing over here only real estate person who are engaged in construction of residential and commercial property, you won't be allowed ITC. That is what the sir started with cost optimization. That for the person who are in real estate business, though ITC is not available for them, it is a cost which they have to bear. So if it is in relation to residential, then no ITC. But however, if you are in commercial construction, then ITC will be eligible.
Yeah. So one point here for members is when we are looking at the basic provisions of RCM applicability here, we are not looking at the income side of the P&L, we are looking at the expenditure side of the P&L. So that's a focus that one should be looking at all my expenditure in the P&L. So in today's session, we are going to cover the various provisions which the real estate industry look as to what percentage of the expenditure they need to look for and various things. So here we are talking about an expenditure that is incurred and the GST applicability on it. So keep that in the background as a focus. Yes, Ashika.
Now, another part of it is time of supply. It is also important to know when you have to discharge the tax liability. This is we are talking about generally the time of supply applicable for reverse charge mechanism, because whenever any service or goods covered under RCM, this is the time supply you have to follow. However, in certain circumstances, specifically in real estate, they have provided a different time of supply compared to what is provided under the Act. So generally, which is applicable for RCM is, in case of a goods, you have to pay earlier of date of receipt of goods or 31st day from the date of issue of invoice or payment date, whichever is earlier. But when it comes to service, you have been given 61 days window. So if you have made the payment before 61 day to your supplier, over here payment date means payment to your supplier. So if you have made a payment to your supplier before 61 days, then the payment date. If you have didn't make the payment, then 61 days after the date of invoice will be considered as time of supply. It's very important to discharge your tax on time. Otherwise, interest will be keep triggering and it is 18% that will be applicable on it. Another point to be noticed in this, that if you remember condition for ITC availment, though in our case real estate ITC is maximum get disallowed due to rate notification condition, but whoever in a commercial construction service ITC is allowed for them. In case of RCM, we have one condition that we have to make sure we make our payment to supplier within 180 days. But in case of reverse charge mechanism, this payment to supplier within 180 days, it's not a condition. So even though you didn't make payment to your supplier within 180 days, but you have paid the tax under reverse charge and you have properly disclosed it in your GSTR 3B, then you will be eligible to of ITC irrespective of the fact payment made to supplier within 180 days, after 180 days, or where payment itself is not made. The only condition is ITC availment is based on payment made in GSTR 3B or through DRC 03, but it should be voluntary. It should not be after the intervention of department, because if it is a section 74 case, then ITC availment will be not allowed.
So basically, just to sum up, you have to ensure that every month you look at the expenditure. In the same month, discharge the required tax under RCM also, sum and substance.
Another important point is documentation. Now, if we receive RCM services from a registered supplier, so obviously they will be issuing you a tax invoice. And if you remember, Rule 46 of the tax invoice says that you have to mention one line whether tax is dischargeable under RCM, yes or no. If any invoice you receive, you should check for that line. If it is written and if it is written as yes, and then you have to make sure whether you are liable to pay under RCM or not. It's not the case, even though supplier might have mentioned it inadvertently by mistake, then you have to make sure to get the invoice corrected, because while filing it GSTR1, he will be also uploading that data wrongly, which will be resulting in your to be auto populate also wrongly, and based on to be, officer can demand you the tax. So it's better whenever you receive an invoice from your supplier who is registered, check whether he's mentioning whether tax is payable under RCM, yes or no. If he is mentioning no, then you are not liable. That I will not say, because even though if his mistake cannot be, you can't take benefit of it that he has said no, that's why I didn't discharge. You have to go by notification 13 for services to determine whether you are liable under RCM or not. But this is a one check you should do whenever you receive a tax invoice from registered supplier. If it is an unregistered supplier, obviously he will be issuing either some document or may not be issue any document. In that case, if supply is received from unregistered person, which is covered under RCM, then as a recipient of that goods and services, you are required to raise self-tax invoice. So you have to raise a self-tax invoice writing about those disclosures that these are the services or these are the goods on which you are discharging tax under RC. Plus, you have to also raise the payment voucher. If you are following Tally, then it is an inbuilt mechanism where you can generate and keep it a record for yourself. This self-tax invoice, you can raise a consolidated one. Means monthly one is allowed as per law. But payment voucher should be individually. Consolidation of payment voucher is not allowed. So for every service received from unregistered person, you should have self-tax invoice and you should have a payment voucher. Just for self-tax invoice, you have been provided an option to raise one
Vishwas?
Sir?
I think Ashika Madam's screen is frozen, right?
under section 73 got over in the month of September,
Screen is
March. So
displayed. Some voice is not.
what?
Yeah, no, it's.
Hello?
No problem. Please go ahead. Please go ahead, Ash.
Okay. So 1819 is in December, 1920 is your March. So if these documents are properly maintained and you do proper working of it, you can avoid a huge cost due to litigation. Now coming to the RCM applicability, we'll move one by one. In RCM applicability, first we will touch the topic which are specifically related to your real estate. One of which is supply from unregistered, then services. This is basically the broad base which are covered under RCM, but we have covered only specifically in relation to real estate. Now, starting from unregistered persons. Now we know that from 1st April they brought in a new GST rate notification whereby they have reduced the GST rates on your residential and commercial construction. But this reduction has come with the multiple condition. One of the condition of this is no ITC availment, and another is about reverse charge. So which are the things they have covered under reverse charges? Development right. That tax on development right need to be paid by promoter, builder, developer, whatever name we call under RCM. And second, that you should be a promoter, developer, or builder, you should make ensure that you may 80% of your purchase of inputs and input service from registered person only. Now, if you will notice that when the purchase of 80% is covered, it is covered only input service. Capital goods is not covered. So 80% is from input and input service. That is the total you have to check in order to identify whether RCM is applicable or not. So taking one by one, first taking purchase of 80%. In this thing, what you have to check is whether your supplier is registered or not. If your supplier is registered, not an issue. But where there is a procurement has been made from unregistered person, then your mind should start triggering whether 80% quantification you are qualifying or not. Who should be the recipient? Promoter, builder, or developer. Now, this 80% relates to input and input service, and they have specifically given how it to be calculated, which we will be discussing in our subsequent slide. Now, another thing is this in they though they are mentioning input and input service, but from there they have specifically excluded cement. So for cement, they have not provided any threshold limit or any percentage. It is straightforward 28% if you have procured from unregistered person. So if you are having any supply from for cement from unregistered person, you are liable to pay tax on it. So check for those. Then comes the capital goods. For capital goods also, there is no threshold limit. If you procure anything from unregistered capital goods, then again you are liable to pay tax. Tax rate will be as applicable on capital goods. It may be 28, it may be 18, it may be 5, whichever rate applicable on capital goods. So the challenge which comes is about input and input service, how we should calculate. So this is what the summary of what we discussed. But in this, like I said, how to calculate this 80% is important. Now, while calculating this 80%, they have given certain criteria which they are saying, even though it may be a case you have procured from unregistered person, or you may have procured where tax is not livable, I will consider under a 80% as a receipt from registered supplier only. So how it to be calculated is, for the value purpose, what they have excluded is supply on which you are paying under RCM. So, like legal service, sponsorship service, GTA service, which are specifically covered under RCM, on that you are paying tax under RCM, they are saying this will form part of your 80%. Means I will not assume that it has been received from unregistered. As you are paying tax, so this benefit they have given. Second is composite purchase, because on composite purchase they are directly getting from their supplier, so they are saying it will form part of your 80% calculation and you won't be liable to pay tax under RCM. Then your TDR. Reason for excluding TDR is also the same, because on that they have made you, promoter and developer or builder, liable to pay under RCM. So, what would be considered, what that 20% can be is unregistered supply or exempt goods or services. So, if you have any exempt goods or service or unregistered supply, then you have to be careful. It should not cross more than 20%. If it cross more than 20%, then you may be made liable to pay under RCM.
Okay, couple of points which I want to add, Ashika, here is again just to people for going for the computation of it. As Ashika said, the 80% condition in the notification 3 oblique 2019, they have said 80% value of input and input services. Okay. So then when we look at the notification 7 oblique 2019, where they have specified the rates applicable for this transaction, uh, the rate there they have specifically said cement actual rate, which is 28% every month, capital goods actual rates, whatever is applicable. So now when we are computing the 80% shortfall, the way one has to see is I am seeing all the heads of the P&L, from which I will anyhow obviously exclude salary because that's a Schedule 3 activity. So let's say my project has 100 crores cost. Out of 100 crore cost, to find out how much of purchases are from registered person, salary is excluded. Let's say 20 crores is salary, 80 crores is the cost that is left there. Now, out of 80 crores, let's say 50 crores worth are from registered dealer purchases. Now I'm left with 30 crores, which is purchased from unregistered dealer. So when we say 30 crores, 30 over 80, ideally, if it is 30 on 100, it was 30%, but now 30 over 80, which means I am short as close as 20%, right? Around 16, 17%. Now, I cannot straight away say that there is a huge shortfall. I am mandatorily supposed to pay all the reverse charge liability for cement. So, because I am paying as a reverse charge liability under cement, it will be deemed as a registered purchase. Second, I would be paying a reverse charge on all the notified services. 9 subsection 3, whether it is GTA, security, legal fees, everything, I will be paying under a reverse charge. So a mandatory reverse charge which I am paying would also be treated as the deemed purchases. Now, out of 80 crores total purchases, if we say 80% of it, 64 crores should be from registered person. Originally, we only saw 50 crores are from registered person. So there is a shortfall of 14 crores. Now let's say that the RCM on these notified services, RCM on other activities is amounting to another 7 crores. Now, what I am shortfall is that balance. Okay, 7 is an odd number. Let's say another 8 crores. So 58 crores. So out of 64, I will now be paying the RCM at this rate, which Ashika is mentioning 18%, only for the 6 crores. So the computation is very much important. Now, this computation has to be definitely the question that comes is when do I compute and when do I have to pay? Now, the question is also very much important because the requirement is the project wise accounting. However, when it comes to RCM, it is not project wise accounting. The Ashika is going to deal in a while, but before that, another point, interest expenditure is an exempt supply. In the total cost, should I include interest? Answer is yes. If you have an unsecured loan that is raised from directors, related parties, and they are unregistered, you are paying interest to them. Unfortunately, you will end up paying GST at the rate of 18% on it. What can be a tax planning mechanism here? We can see. As we all know, ITC is a cost. Look at the low hanging fruits. Look at the low hanging fruits. Now, jelly is the all the sand jelly is at 5%. It's always worth exploring buying those goods from a registered dealer than an unregistered dealer. Labor payments that you are making. Most of the time, people deal with labor, unorganized sector, daily laborers or a weekly laborer. Instead, having that as a cost, amongst the labor that you have, can you have some labor, senior labor contractor where who can accommodate transactions up to 50 lakhs in a year? We have a composition scheme for services 10 subsection 2 capital A, where the rate of tax that would attract for the transaction is 6%. It's worth paying 6% as a composition tax versus paying 18% RCM. It's worth paying 5% cost for all the sand jelly material rather than paying it 18%. So you got to definitely look at out of total expenditure where I have incurred without GST. If I had procured from a registered dealer, what would have been cost optimization? Most probably the purchase decision, since ITC is a cost, the buyer, the procurement manager would compare apple to apple. For him, the cost of loading would be including ITC. So he would be looking at that. And he would have given a quote to a dealer who has given all inclusive at a price. So every finance project member who is here, it is mandatory that you educate the procurement manager that you buy from a registered dealer, especially where the rate of taxes are lower. This is very important. And if you don't, then you are not doing a cost optimization. You end up paying from between 5 to 18, 13% higher procurement cost, which is very high. Hope you got a flavor of how you can plan and optimize your ITC cost. Please go ahead, Asha.
Yeah. Even we did a session for cost optimization.
Yeah.
So 5, 6 session back, you can refer that in order to how you can plan so that IDC doesn't become your cost or tax payable under RCM. Now, as we were discussing about when to compute and how it to be compute, so in case of input and input services where 80% procurement have been given, threshold limit has been given, they have provided you have to compute it project wise. You need to do this calculation. You have to do the calculation by end of the financial year, and this need to be done before June. Third, that this payment of tax which you are going to make under RCM, it need to be made payment through DRC03. However, when we comes to the cement side, they said that it will not be like year end and all. It will be like in the month in which you receive the cement. So based on receipt, you are liable to pay under RCM for cement. For input and input service, 80% procurement threshold limit, they have given you a year and time limit to do those calculation. The things you should note is it's a project wise, so you should not do it club to the total of all the project you are doing in order to see whether you qualified for this or not. It should be single project, year wise computation, payment to be made in DRC03. Another important point is like non GST supply schedule 3, that will not form part of it. So you no need to consider those transactions in order to determine your 80% limit. Now coming to few illustration for better understanding is, this is one of the illustration where we have given 8 items, where we are giving percentage of procurement and whether it is from registered or unregistered dealer. Now over here, if you will see, we have given all are from registered dealer. Only for cement and only for paint, we are saying it is from unregistered dealer. Now, when we come to cement, as we already discussed, that 80% limit will not be applicable, because in overall you will be seeing 16, 15 plus 5, so it is 20 only. So 80% criteria got fulfilled. So you will feel like no need to comply with the RCM applicability over here. But that is not the case. Though on 5%, even though procure from unregistered, you are not liable under RCM, but when we come to cement, there is no threshold limit. You have to pay tax on the same. That is also at the rate of 28%. Another scenario is where your purchase from registered supplier is 80%, purchase of cement from unregistered 10, other purchase from unregistered 10%. So how you will calculate your 80% limit is, 80% is from registered dealer 80, and unregistered dealer is your 80% B, and 10% will be also form part of your calculation, because like we discussed in previous slide, that even if the tax paid under RCM due to other reason, being a notification 13 or 4 where RCM applicability has been prescribed, plus where you are paying under RCM on cement and capital good, that will also form part of your 80% to identify whether there is a shortfall or not. So over here you have paid 80 plus 10, 90%. So it is above 80. No need to pay under RCM for input and input services, but specifically for cement, you need to pay it. Similarly, this is another example where we have covered variety of things like purchase from registered supplier 60, inward supply where you are paying under reverse charge 10, purchase for composite dealer 5%, capital goods from unregistered supplier 15, and other purchase from unregistered. Now over here, if you will notice, purchase good from unregistered supplier 15%, on this you have to pay under RCM. There is no exemption for it. Now while calculating that 80%, what you will consider is 60 plus 10 plus 5, even composite will form part, plus 15. So again, you will notice that when you add up to this, it's above 80, and there will be no liability to pay under RCM except capital goods, which is specifically covered without any threshold limit. Now, in this cases, what issues you can face is common expenses of admin. There may be expenses which have been incurred commonly for the project. How you should consider for the purpose of calculating this. Then you should do on a proportionate basis, project wise, or if you know how it can be allocated, you should allocate those costs and see whether you are falling below 80 or above. Then another point you can ask, there may be a case you might have paid excess tax under RCM last year. What you should do? There is no adjustment by way of circular. They said no such adjustment will be allowed. However, you can still fight for it if amount, seeing the quantum you have to decide. So still you can fight for it. If you have made excess payment, you can make a proper calculation, keep it ready if you are making adjustment in subsequent year. Interest from private unregistered, like interest already sir has discussed. Now, sometime under real estate project, when we are taking for RERA, we might have multiple RERA registration for a single project due to phase wise or due to uh, your convenience, where you might have taken for 10 towers separately, that sorry 10 flats separately, then 10 floors separately, then again 10 floors separately. In those cases, how you should do, now it's all depend upon how you have taken your GST registration. If you have taken registration phase wise, then it will be considered as one project, even though it's full properly fully is your consolidated project, but your GST registration will determine which, how it will be considered as a project wise for the purpose of calculation of your RCM liability. One. Second, there may be a case where you are doing commercial also, part of it. In that case, to the extent of commercial, ITC is allowed. So based on carpet area, you have to do the calculation. In case of non-compliance, sir already discussed at the starting, before starting the session, that there is a tax, interest, and penalty ranging from 10 to 100%. Sir, you want to add something?
Nothing at this point.
Now, another important RCM liability is development right. Over here, we are just discussing 1st April 2019, because after 1st April 2019 only RCM has been introduced. So over here, whatever be the type of construction, residential or commercial, developer is liable to pay under RCM. That is GST rate at the rate of 18%. And the biggest disadvantage is ITC is not available. If it's commercial, then it will be. Otherwise, for residential, it is not allowed. What should be the value? Value, like they said, for the landowner nearest. Similarly, for TDS also, nearest value you have to consider.
Yeah, I would like to add something here. Though the slide we try to simplify and put it up. Okay, so in the most of the apartment transactions, joint development agreements, there would be a component of non-refundable deposit given to the landowner. In the valuation that we are talking, value of the apartment charged only to the extent of the construction services provided. Assuming I am the landowner and Ashika is the developer, if Ashika has handed over to me 10 flats in lieu of my development right, the value of the development right which I have provided is the value of this 10 flats that I have received. The open market value of those 10 flats which I have received, the explanation 1A in the notification 4. Okay. Now, at what date we have to take it? The nearest date on which the agreement is made, on the joint development agreement is made. So whenever the development right is assigned, the nearest date. Okay. Now, on the contrary, if I have agreed saying that let Ashika give me 2 crores in cash and she will be giving me 8 apartments, then the development right, my value will be 2 crores cash plus the apartment equivalent value. So what I have provided the service is the development right service, The value of that service is the cash that I have realized plus the value of the apartments that I have taken towards in lieu of those development rights. Please note, the tax rate for this is 18%. So on this value that is being computed, 18% needs to be applied. The 18% needs to be applied. Ashika, the next slide, you actually have the monetary and the non-monetary consideration. Yeah. So the 18% needs to, next slide, Ashika. Ashika, next slide. Okay, maybe I'm okay. So once we apply the 18%, the value that is derived at this has to be discharged by the builder promoter. It is not the landowner promoter, but it is a developer promoter who will have to make the payment of taxes on the reverse charge basis. This liability
This
is
certificate of completion certificate for the project, or on it first occupation, whichever earlier, on that date you have to discharge under RC. Now for residential, there is one exemption. But this exemption is applicable only in the case where all your flats have been booked before
Ashika, the
receiving
slide is
OC.
not visible.
So if all the flats have been now,
Vishwas, is the slide coming up to you?
now
Vishwas,
is it visible?
no. One moment, participants.
Sir, is it visible now?
I have shared it. So for the ease
Is
of
it visible now to all?
Yes, sir. Hello.
Ashika, you can go
Yes,
ahead.
madam.
Yes.
You are visible here.
Ma'am, screen has been shared, ma'am. No.
Yeah. Yes.
So, as we are discussing about development, right, where they have provided an exemption, but exemption is only provided for construction of residential apartment. So, if you are engaged in construction of residential apartment, even though there is a transfer of development right, you won't be liable to pay tax under RCM, provided that all your flats have been booked before OC. If all booking has been done before OC, then this exemption has been provided. However, in case if your flats remain unbooked, then they are saying in case of residential apartment to pay to the part proportionate to the unbooked flat. Now how they are saying about the calculation is, you need to calculate your carpet area which remain unbooked divided by total carpet area into the GST payable on TDR. Like we discussed how it need to be valued, what should be the rate, based on applying on that value the GST rate of 18%. Whatever the tax component come over here, you have to multiply with unbooked area of the residential apartment, and to that extent you would be liable to pay tax. Now, this is also come with another condition that they want that there will be a minimum. So they have put one bar that it cannot exceed your value of unsold apartment into 5% or 1%, affordable or non-affordable. Based on that, it will be your tax payable for TDR in case of residential apartment will be determined.
Yeah. So this computation is very important, and against each project, everyone have to undertake this. So there is a monetary and non-monetary, and you have to ensure that you do it once in an year. Okay, and once at that sorry, once in every project on the closure or that the OC date. So yes, Ashika, go ahead.
So value of supply is similarly what we discussed. Rate is also 18. Time of supply is JDA date or allotment letter date. Then your valuation part. In valuation, you have to keep in mind, like normally when we are doing valuation of our apartment, we get 1/3 deduction for land by providing construction service. That is not applicable in case of development right. So in case of considering, though they have provided the value need to be considered of flat sale near, but 1/3 deduction is not applicable to it. So when you have to discharge, that also we discuss. Now, if we summarize the liability which need to be paid by promoter, builder, or developer in case of development right, is for construction service basically. For sold unit, if it is before OC, you have to pay tax under forward charge at the rate of 5%. If it is an unsold unit, then you have to pay under RCM. When exemption is not available, obviously where you are selling after CC unbook, you have, if this transaction has happened before 1st April 2019, because RCM applicability has come on that date. If it is for commercial, like I discussed, this exemption is specifically for residential. In case of commercial, you are liable to pay under RCM. There is no exemption for same. In case of RREP, where part of it commercial area is also done, in that case, to the portion of commercial property, you have to pay tax under RCM. Exemption will not be applicable. Sir, you want to add something?
Yeah, so certain corrections I want to do. So in the commercial portion of the RREP, the credit of that would not be available. So when we say exemption is there, it would only be there for the residential portion. If the 15% and above the commercial space is there, then the exemption would not be applicable to the commercial portion. Otherwise, everything is same. We can continue. And we can go to that slide of notified services, other notified services, where all the, yeah. Okay, so this is a very important thing. Now we have seen one major component of it is the second one, TDS and FSA, is what we have seen in detail. So out of the total purchases, I have said the notified services you have to mandatorily pay. The concept of 80% is not applicable here. And all those which you are seeing in the blue color are applicable to you. So to the real estate industry, it would be applicable, though there are other services, we are just ignoring it. Generally, when people say RCM, they only talk about GTA and legal services. Rest, there are services. Most real estate companies sponsor lot of events. And when these sponsorship services are availed by the companies, people treat this as a business promotion and advertisement expenditure. But the real estate developer should be paying under RCM for these services. Second, lot of licenses, renewals, registrations that we take from the government. RCM is applicable for all the taxes that are discharged. Director services. I have seen many builder promoters take directors on board basis the strength of their financials. Funding is taken from the banks. In lieu of compensating them for giving their personal guarantee, whatever the guarantee, a guarantee commission is paid or a percentage of the loan taken is paid as commission. Some of the builders take a celebrities on board who are endorsing the brand. A certain commission on the sales is paid to them. Now, all these fees that are paid to the directors, which are not in their individual personal capacity as a service which is provided to the company, should be subjected to the RCM. Again, since this is at par with an employees, the no RCM is done, nor it is treated as a salary. Had it been treated as salary and under section 192, the TDS is deducted, that's a different story. But this is treated as a direct remuneration paid to the director, and which would be most likely an year-end adjustment entry basis the derivation of the profits. I am not saying the profits are overshooted, but the value is derived basis certain assumptions which have happened at the year end. Not really considered, people make mistakes. And we have been noticing in the lot of the department audits which are going for the financial year 1920, 2021, 21, 22. We are now unearthing that the ADT 02 are coming and the clients are asking us, okay, what can we do? Can something be done? The answer is no, unless you are acting it in time. When something can be done, if you are remitting these taxes on or before the 30th November 3Bs that you are filing, you can make good of anything that is not made good. Security service is a recent, when I say recent entry, the above service entries were there from 2017. 18 security got introduced, 2019 renting of motor vehicle was introduced, 2022 residential dwelling got introduced. All the line items which are there below are available for all the builders or the developer promoters. So even here, people have to ensure that why these things are missed out is a specific thing that they have to look at it and they have to come. So if we have to just summarize, there is a checklist. Ashika, can you just press G and go to the slide? There is the steps.
Yes, sir.
There's one slide where the steps of,
Yes, sir.
no, in the same PPT. Which I have said in the beginning, basically check all the expenditure. This is something which people are missing it out. Check all the expenditure. Now, wherever the expenditure is without any GST, any payment invoice without GST, ask this question, why there is no GST? Is there any exemption notification for this? Has the supplier issued in the invoice on the face of the invoice itself saying that, hey, this is a reverse charge, you make the payment of yourself, right? You make sure you do this. And reverse charge liability, if you are paying, if the project is a commercial project, ITC is available even for the reverse charge liability. This is as good as a regular input tax credit. So you have to do this exercise project by project. That is very important. Any questions? Everyone, anyone? You can unmute yourself and ask the question, or you can put your question in your chat. All right. So we will also be sharing a copy of presentation to the people who participated with your registered email ID. We'll share a copy of it. Otherwise, these are our coordinates. You can scan this WhatsApp, join our WhatsApp channel to get the updates on a regular basis on the GST. And special thanks to Ashika, who had actually put it up to all this presentation. But I was traveling, couldn't be there. Yes. Looks like there's a question. Okay, there's no question. Vishwas, over to you.
Yeah, sir. Thank you, sir. Hello.
Yes, Vishwas.
Yes, sir. I thank all the speakers for giving us their valuable time and educating us on this topic. I also wish to thank all the participants today for the patiently participating in the session. Hope the session was informative and knowledgeable. If you have any queries, please do contact us. Thank you and have a nice day. Thank you, sir, once again. Thank you, sir.
Thank you,
Thank you,
sir.
ma'am.
Thank you.